very, very grateful that Lewis Stringer has stepped in, Senior Relationship Manager at the British Business Bank. I actually had the privilege just yesterday of hearing your CEO speak at a major UK-Qatar forum for business investment and growth. With it seemed, masses of people from Qatar who are visiting the UK at the moment and looking for business growth and investment opportunities here, hosted by the UK government, the Department for International Trade. Such a buzz, such interest, and actually what British Business Bank does is very, very important to that. So it's great that you're able to come here and speak to us. So Lewis Stringer, everyone. Thank you.
Would you like to make my presentation? It's a real pleasure to be here today, and I expressed that pleasure with the organisers when I found out late last week. But then I sat at the back of the room and listened to eight great presentations. I thought, oops, particularly from entrepreneurs and innovators. Is there somebody at the door by any chance? Because I'm very conscious that I'm the first public sector speaker as well. From my point of view, there are still established businesses that for various reasons will still struggle to raise finance, and we also run a number of programs. And although you probably would have heard of startup loans, some more of you in the financial intermediaries sector or banks will also have heard of Enterprise Finance Guarantee Scheme or Small Firms Loan Guarantee Scheme. And again, that's a scheme that we manage on behalf of government. I also talked about the fact that one of our objectives is also to support better information amongst businesses, and I'll touch a little bit on how we do that. But we're also very keen to, I heard this a lot this morning about failure isn't necessarily bad. And there are quite a large number of businesses that will be declined by the first funder they go to. And in fact, there are some recent stats that came out that said you'll typically go to the funder you may have a personal bank account with, for example, as your first point of call, because you've got a track record with them, they know you, they've had your accounts. But if you're declined by that bank, 71% of potential business people that approach their bank get declined, don't look at any other alternative type of funding. And so from our point of view, that's awful, because yes, some of those may be for very viable reasons, but again, even if a small proportion of that 71% will grow and develop a successful business and employ people, we need to look at that. So we set up a referral scheme whereby the high street lenders now need to refer any propositions that are declined by them to alternative funders. It's early days in that respect, but I think it's a step in the right direction. And a lot of lenders, whether it be high street challenger or alternative funders, rely a lot on credit scoring, and you would have come across that phrase in terms of their decision-making process. And we've been working with credit reference agencies such as Experian and Equifax just to make that system and process a little bit fairer and a little bit more transparent than it is. So at this stage, you're either really bored with what I'm saying, or you're thinking, this is great, why have we ever heard of you before? They're doing some great stuff. Or maybe neither of those two. But actually, if you're thinking the latter, it's not necessarily all good news. And the reason why it's all good news, not good news necessarily, is because actually as part of that market failure, there's also a geographical market failure. It is easier for a business in Shoreditch to raise finance than it would be for a business in Sheffield. I only use Sheffield because it's S in Shoreditch. I couldn't think of anywhere local, so it's South East Midlands. But it is, and that doesn't necessarily mean that business in Sheffield is any less viable or has less potential than that business in Shoreditch. It's just that the infrastructure is around Shoreditch. It's more of a track record as an area of investing in those startup businesses. Probably the investor is literally around the corner from where your offices are. And probably outside of the M25, that infrastructure doesn't exist. It's happening more in the big cities, but it doesn't exist. And that's not fair either. And you would have picked up, certainly from a public sector policy perspective, that regional disparity, space, place, is a key term that I think will come to the fore certainly over the next few years. So we're an economic development bank. What are we going to do about this? On the 22nd of February, we launched the Northern Powerhouse Investment Fund, and we will shortly launch what is called the Midlands Engine Investment Fund. So what I'd like to do in the remaining time that I have available to me is just talk a little bit about the Midlands Engine Investment Fund. The fund is currently made up of £250 million public sector funding. Yes, it does include European funding. It does exist and it will do, and we will use that funding for the duration. It also includes some investment from the European Investment Bank, and again, strategically for us, the role of the European Investment Bank going forwards is probably a more interesting discussion point, which hopefully was covered off last night. We as a bank are fully committed to this fund. We do a bit of direct investment ourselves, but it's not our core business. And as a result of that, we're going to invest in this fund as well. And there's some grant funding coming from UK government. So hopefully you can see the map there. Hopefully you can see the dark blue navy area. And this is where I say I do apologise. It's the Midlands Engine Investment Fund. It may not mean anything to you, and I know geographically there's a focus there. And I also know, having worked in Milton Keynes over the last 5 months or so, that you may not perceive yourself as being in the Midlands. That's fine. Don't worry, don't apologise.
So just for the avoidance of doubt,
Yeah.
the area that is covered by the now South East Midlands Local Enterprise Partnership, which is the whole of Northamptonshire, the 4 unitary authorities of Luton, Central Bedfordshire, Bedford and Milton Keynes, where we are today, so anybody in Milton Keynes, Aylesbury Vale and Cherwell are actually, for this purpose, don't stray beyond that for the moment, but for this purpose, we are part of the Midlands Engine Investment Fund. Okay.
So again, I was going to come on to that, but let me go back. So what I was going to say is, although, you know, as a business, as an authority, you may not see that boundary as being relevant to you, that terminology, that actually the fund works to LEP boundaries, and as the Chair quite rightly said, we cover 10 LEP areas, which is West Midlands, East and South East Midlands. So all that basically means, don't worry about the terminology, don't worry about the headings. If you are a business or you're working with a business in the SEMLEP area, they will be eligible to actually apply to the fund. Okay, so that's an important point from my point of view. So it's a balancing act. So like everything we do as an organisation, we're going to be looking at supporting businesses that have viable business plans. This is not grant funding again. But again, our fund managers aren't going to be competing with banks and other funders out there, but they're going to be taking a higher risk profile in the types of propositions that they can work with and support. So let's talk very briefly about the 4 funds. They're very busy slides. I do apologise. I didn't get the chance in a short period of time to amend those. But this gives you a rough flavour of the type of funding that will be available through the Midlands Engine Investment Fund. We're going to provide equity funding in that equity gap area, providing relatively small amounts of equity funding for growing businesses. And we're going to focus on those businesses that are relatively early stage and are looking for a funding up to about £750,000. We're also going to be finding debt funding. Now, I see this operating very much with existing high street lenders and other alternative funders. And typically, we can get up to 1.5 million, but most of those loans are going to be below £500,000. And then possibly, as interesting, we're going to do 2 additional funds. The first is a small business loan fund, really targeted at those startup businesses that will struggle to look at raising normal commercial funding because they are very early stage and they won't necessarily have a track record or asset base. And last but not least, which is unusual because it's not happening in the Northern Powerhouse Investment Fund, we're going to operate an early stage proof of concept fund. So this is really about a business idea. It can be pre-revenue businesses. You're looking at IP-rich businesses. You're looking at businesses looking to commercialise out of their respective universities. So where are we with the Midlands Engine Investment Fund? We've gone through a procurement process, and if anybody in the room is actually in the public sector, you'll know that that can be a very painful process, if not elongated process. We've completed that. We've selected our fund managers. And we're just doing the legal due diligence and negotiation around the agreements for those fund managers. So we expect that to be completed over the next month with a formal launch in May. We've committed quite rightly with each local enterprise partnership to actually run a sub-regional event to which I hope as many of you can attend in due course. In terms of promoting the fund, we'll have fund managers in place. So in the same way that we work with delivery partners, high street lenders, etc., we're going to be working with fund managers that we've appointed through the procurement process. Those will be professional, authorised fund managers. They'll be on the patch. There's a commitment they will work in all of what I call the nooks and crannies of the East and South East Midlands, because it's a large geography, and there's a real commitment to the LEPs that they will invest the amounts of money that the LEPs themselves have put into the fund. And in terms of South East Midlands, that is a reasonable, sizable pot of money, and the LEP have been very proactive, working with me over the last 5 months to raise awareness of the fund. Talked about information. Hopefully a number of you have come across the Business Finance Guide. This is a document that we published 2 years ago, co-published it with the ICAW. Again, it has a number of member organisations. If you're a business looking to raise finance, if you're an intermediary working with clients that are looking to raise finance, can I, if I do nothing else, recommend this Business Finance Guide to you? I have a number of copies, but actually, if you look at the website there, that's a good way of downloading it, and it also enables you to put some key information about where the business is, and then you get a personalised business finance guide as a result of that. And that's just how it appears on the interactive version. I'm just going to very quickly go back, if I could do, Chair, because what I did miss out just because of time. These are the partners that we work with. So a lot of those 90 plus partners will be familiar logos to you, and we do work with high street lenders, alternative funders, challenger banks, peer-to-peer lenders, crowdfunding platforms, all the new type of funding streams that you've come across, we are working with them. And we either fund them directly or we find innovative mechanisms through which we can get them to lend and invest more in early stage businesses. Thank you. Questions?
Thank you so much, Lewis, and apologies for just that intervention
No,
to
please feel
clarify, but I didn't want people not to know that this
Yeah.
wasn't relevant to their businesses. So, as with the other sessions, your chance now to ask any questions or ask for further information from Lewis about British Business Bank, and particularly the Midlands Engine Investment Fund. So, one from Mark here at the front, if we can get a microphone there. And sorry, there's one already with a microphone. I do beg your pardon. But if you can get one to Mark, we'll take the one on the balcony first. Yeah.
Hi there, Emerson Patton, Bright Business Advice. I work with lots of small businesses, helping them to grow. Some of them aren't in what startup was, so I'd love to ask you again, what is startup and not fun and all that stuff, which would be great, but they're all fun, trust me. But which ones actually then qualify for getting investment to grow? What's the sort of definition for that startup loan stuff? That'd be great, thanks.
Yeah, no problem at all. So in terms of the specific startup loans programme, it's a national programme run through us, run through government, run through startup loan scheme. We like to make it difficult for ourselves, I know. But basically in terms of startup loan scheme, it lends up to £25,000 per business. The interest rate is 6% fixed. It's unsecured lending, which is often the issue for our startup business. And because of the way it's delivered through series of delivery partners organisations, they also throw in a year's worth of business support and mentoring on top of that. Because it's lent to the individual rather than the business, they can potentially lend more if there's, for example, a number of partners in the business. But it's relatively small scale. In terms of definition of startup, and I'm conscious some people weren't here, I think the gentleman from Virgin Startup mentioned, his definition was when it stops getting interesting, exciting, it's no longer a startup. I wouldn't necessarily agree with that. From a technical point of view, we in the public sector often define startup businesses as pre-trade, all the way up to about 18 months, 24 months after starting trading. In terms of the Midlands Engine Investment Fund, we're just looking for growth propositions because we're going to be, through our fund managers, we'll be lending money. So the business plan needs to demonstrate an ability through the forecast to repay the loan and the debt. In terms of the equity investments, then it's like any other equity funder. They're looking for potential return and therefore growth opportunities in that business. Every business is different, but it comes down to the business plan. And taking on board sort of, I think the organisation and your role as well, is what I'd say is that one thing I have found, and particularly in the early stage market, is the importance of businesses getting the right advice. So they not only know what they're doing, if they don't already, but also funding's a little bit strange. And what I mean by that is that what a funder or an investor looks for isn't necessarily what the entrepreneur or founder thinks is important. And part of that mismatch is quite important to address that through the business advice and support they get.
Happy with that, Emerson? Yeah, okay. If you could pass
The middle ground then is what you're saying is coming, because at the minute, if you're a startup, 24 months or less, fine. But if you're middle ground, you've been going 5, 6 years, you're on a growth curve, but you need to take it to the next level. That's what's coming with this next round of funding.
Yeah, we're looking for growth. We're looking for growth capital propositions, and in fact, most of the programs that we deliver through partners, whether it be the equity programs such as the enterprise capital funds, they're about growth capital, and they're looking at propositions that can grow and develop. I wouldn't define it too much in terms of how old that business is or how established it is. But again, as we've seen from 2 slides now, the nature of the marketplace at the moment is that businesses are having an increasingly shorter timescale of longevity to it. But yeah, we're looking for growth businesses at whatever stage. But it tends, the market failure, which is what we're about, tends to be at an earlier stage. So it's not 20, 30, 40-year-old businesses, for example, if they still exist.
Happy with that, Emerson?
Brilliant, thank you.
So it sounds as if maybe this event that I think our LEP will organise with you in May might also be a useful thing for you to come and get some more details, but you can probably take Lewis's card as well.
Absolutely, and I'd love to make contact in the break afterwards. For us pre-launch, it's about raising awareness and finding out who's working with businesses in the area as well.
Jolly good. So we're going to take 2 more. There's Mark first, and then if you can just pass your microphone, or perhaps it's been taken. There's a couple on the row behind you there. So Mark.
Lewis, hello, good afternoon. Mark Baker from UK Partnerships Group. UK Partnerships Group, in conjunction with Milton Keynes Business Leaders Partners, recently launched the what was termed as historic trade link between this region and the United Arab Emirates, which is the first of many, we hope. Now, as well as exporting technology, expertise and know-how from this region, in which we're rich in, over to those territories, there's a lot of interest from the territories to bring that technology and expertise and know-how back into the UK. What is the eligibility criteria for, let's just say, some of our foreign clients who might wish to come into the UK, set up a new business, but require funding?
It ultimately comes down to the ownership structure of the business.
Would need to be a registered business as with Companies House or nationals?
Ideally, UK registered, and then we just need to be a little bit careful about what the final ownership structure is, in terms of how much of that is an overseas owner, for example. But certainly in terms of most of our programs, they are national programs. So with the exception of the Midlands Engine Investment Fund that I just talked about, we do have national coverage. But we do really, as a public body, want to clearly demonstrate the growth in the UK and increasing economic activity and wealth in the UK. So per se, we're not an inward investment type structure organisation. And we're also tending to deal with sub £2 million transaction sizes, which doesn't always, but is often probably too small for that sort of activity. But we'll talk to you about it, absolutely. And as Anne quite rightly said, you know, we do regularly have discussions with potential overseas partners in terms of investing in the UK and setting up structures to do that.
Okay, and so just the ones on the balcony there. Yeah, the lady, you've got the microphone.
Yeah, thank you, Lewis. Thank you very much for the helpful information. It's quite a reverse question from the predecessor, actually. I'm interested in investment in developing economy, more or less on the technology transfer, and I just wonder if the funding is available for investment in developing economy.
So in terms of the Midlands Engine Investment Fund, like a lot of our activity, we're very focused on growth capital for SMEs. So the key dynamic, and apologies, I didn't quite catch the last bit of the question, so if I don't quite get the answer right, please come back to me. But I think from our point of view, we want to invest in an SME. What I mean by that is that if it's a university scenario, for example, in terms of technology, we'd want that business to have spun out, so that we're not investing in the university. They may be a significant shareholder still of that SME, but we're actually about providing growth capital for a trading SME entity. But that can include, and often does, when you're looking at growth capital, some degree of IP and knowledge transfer.
So can I just clarify on that? So if it involves university, for example, but you have maybe other consortium that are partnering with university, that would meet the criteria.
Yeah, again, coming back to that earlier point, it depends on how the SME is structured. And that still, despite the ownership of that SME, it remains a small and medium-sized enterprise. So it's not just about numbers of employees and balance sheet and turnover figures, but also what's important is the ownership structure of that business. So you've just got to be a little bit careful about the various shareholders in the business and whether or not that structure still means it's an SME. What you tend to find, and I'm sure there's some universities in the audience, is that most universities, when they're looking to spin out, will have a minority shareholding, albeit at 49%, and there's reasons around definitions of why they do that. So all I would simply say is you probably just need to look at how the shareholding of that business is structured so that it remains an SME. If it remains an SME, yes, we can support it.
Thank you.
Good. I think we missed your name, or perhaps you didn't say.
Oh.
Just for, it'd be interesting to know who you
I was
are and where
too
you're
quick
from.
to ask the question. Shola Adesola, Advantage Global Positioning. But
Brilliant.
I'm also senior lecturer at Oxford Brookes University.
Excellent. Okay. Oh, well, very relevant answer to your question of the universities. Wasn't there just one other one along there, or not? No. Okay, yeah, I thought there was. Yeah, Claire Wood. Yeah.
Hello, Claire Wood, MK Gallery. A very quick question, and reading between the lines, I think I might know the answer from your previous answer.
Okay.
MK Gallery is a cultural educational charity. Does the Midlands Engine Investment Fund opportunity, is it available to trading companies that are affiliated to registered charities?
Again, without knowing, I keep answering the same question, don't I? But to some degree, I keep giving the same answer. It depends, again, how it's structured and the relative shareholding of the business. If the question is more around, are you happy supporting social enterprises, whatever that means, the answer is yes. But again, I'd caveat that very slightly and possibly make myself unpopular by saying, as long as it's a trading entity that can take on debt or is a growth proposition, because we'd still look at it in the same way. So as long as it's generating sufficient working capital to repay debt, or if it's looking for equity, can actually grow and deliver some shareholder value, that's fine. But it does come down to the structure of the business and who the relative shareholders as to whether or not we can supply. And I'll talk to you about that afterwards if you've got a clear view of what that will be.
Well, that's excellent, because I think there might be one or two one-to-one conversations to either have over tea later on, but if not, to be followed up with you, Lewis.
Thank you.
Very, very good indeed. Thanks very much indeed.